you might be able to recognize it. It says here, CADJPY's been under data-driven pressure, but a small positive skew tonight with oil bid looking for long opportunities. That was at 114 this morning. So obviously what we're looking for is those bottom edge sell side liquidities to buy into on the basis that our macro oil is very bullish. Everybody agrees macro oil is bullish at the moment. So CAD makes a lot of sense. It makes a very strong case. So when we posted that we had a plus 38 skew still on this and we were still seeing some upside value, then of course what I'm doing this morning is I'm looking at the London Open, which is always the case for Forex. I'm looking at the London Open and see if that positivity is still available. And it was quite clearly at 108 evens. Well, we just traded a high price of 108.50s. I know it's not a lot of money, still 50 pips. It's still better than a kick in the chops. So it's a good trade. It's a solid trade. And it was a nice winner for us in the London session. So if you got it, if you decided to play along with it, congratulations, nice win. If not, yeah, is what it is. Is what it is. One of the things we did notice from these numbers is the drop off in the skews on the dollar. You'll probably see it for yourself. I mean, we've been talking about this dollar trade since the beginning of the month here, when we had all these positive skews working for us, big positive skews, in fact, working for us on the dollar all the way through the process, and quite a sizable upside range. But obviously last night, you can see that the skew started to drop out to pretty much zero. And obviously when the skew drops out to zero, that means the book is now more in balance. If the book is now more in balance, then it means that there is opportunities to buy it and sell the market. And obviously all you're going to do there is you're just going to drive a little area onto your charts there and say, well, it's sell side top of the box and buy side bottom of the box, and that's the kind of thing we're looking for, isn't it? We don't know ultimately what's going to happen during the day. Nobody does. You've got to wait until it happens, and then you see what the read is, look at what the value is, and then figure out what you fancy doing. And now, obviously, at this point, it's not sell side dollars, so I'd still rather be long dollars. And obviously, this morning, you might have noticed that this morning the carry looked really good. You see, the carry went really good here. There was a little cheeky opportunity to buy the Dixie down in these dips here. And if you decided to do that trade and buy the Dixie on the dip here, there's a very, very nice bit of a sell side value. So there's a nice little bit of value there. And, buying into that sell side opportunity gives you a possible play off the 80s. And yes, it only went for 20 points, but it's the basic idea that it's the right trade at the right time, at the right price. What do we mean the right time? Well, you notice the time here is in this case 9 o'clock in the morning. 8 o'clock to 9 o'clock is the best time to do Forex trading in the world. And that's when we got the Canadian yen long position. So obviously dollar looks very similar to the Canadian dollar at times. So if we're long the CAD yen, then probably the US dollar against the market is probably also good. So buying into that as a storyline makes a lot of sense. And that's where we got the CAD yen from, didn't we? It's worked out. It's worked out nicely. If you decided to play along with it, I like it. I like it a little bit. And well done. Our bond long is still developing quite positively as well. I don't know if anybody's still with me on that bond long. We talked about it a while ago, and it's not really. This is obviously the 10-year, but it's not really done much. And you can see obviously the bond long coming away from the key dealers level several times now, just tapping some levels and going bid. But overall, we can obviously recognize the bond, on the lower time frames, after being massively short treasuries for some time. On the lower time frames, it's been a very easy journey back off the bottom edges, hasn't it? Very easy journey. This is an hourly chart. Drop it down into the 15-minute chart. Drop it down into the 5-minute chart. You'll see very, very easy opportunities to buy treasuries in here. You can see that the curve starts to peel off just at the top edge there, just at the right time. You're starting to tap into those peel off trades there, and obviously taking the price off the bottom edges. It was a reasonable swing. We've went from 127 2s, 3s, 4s, high price 127 16s. Yeah, it's $500, but you're buying bonds. Come on, I mean, you're buying bonds for the first time really in a long time. You've been able to buy some treasuries for that. unwind of the auction process at this point. Cluster them, guys, in 15 minutes. 15 minutes. We'll summarise what it is we've looked at this week. We've looked at the Charlie D and order flow reversals. We'll summarise some of those elements. We'll look at obviously some of the auctions, because they're very, very important if people fancy at least dipping their toe into bond trading. It's an idea to maybe concentrate their efforts on those auctions, because obviously you're going to get a very, very nice opportunity to trade a bit of fundamentals, process information quickly, try and figure out what the trade is going to be, try and figure out if you can get a deal. It's a great way to practice your skills, whether it's live or whether you just don't bother trading anything at all, but or oral demo, it makes no difference. So long as you practice your skills, being able to process information quickly. It is one of those, it's one of those data points that's a really good one to really get into practicing your skills on, so that you can use it across any other market at any other time when you get a data release as well. So we'll certainly touch back on that bond auction. We'll cover the bond curve today. We'll look at those bigger picture bonds in terms of the curve narrative, and that'll be us for a Friday, because it is a Friday, and I'm sure you've all got a big weekend ahead, and we'll be finishing as sharp as we can today, get you guys away for your weekend and away from the nonsense of the markets.